Welcome to Talk Tickers. We're the place you come to get under the hood of earnings calls, really digging into what experienced investors like you need to know.
And today we're tackling AMBA, that's ticker ABV on the Brazilian exchange. We're looking at their first quarter 2025 call.
Yeah, we'll break down the numbers, what management had to say, and what it all might mean for them and the market.
Okay, so started with the results snapshot. AMBA actually reported pretty resilient top-line growth. We're talking high single digits for revenue.
High single digits, okay, and volume.
Volume growth was 0.7%. Doesn't sound huge, but it was actually a record high for them for a first quarter.
A record Q1 volume, interesting. What about pricing, like revenue per hectoliter?
Yeah, net revenue per hectoliter, that's per 100 liters, saw roughly a 6% increase. So good price realization there too.
Okay, revenue up, pricing up, profitability. How do margins look?
Margins look decent. Gross margin expanded by 150 basis points.
Nice.
And EBITDA grew by double digits. That led to a margin expansion there of 180 basis points.
So solid margin improvement. But I heard net income was kind of flat.
It was, yeah, vitally flat year over year. But, and this is a big but, you have to remember they had a pretty significant one-off tax benefit last year, Q1 2024.
Ah, okay. So not quite an apples-to-apples comparison on the bottom line then.
Exactly.
Yeah.
That prior year benefit makes the comparison tough. If you normalize for that, net income would have actually grown about 6% year over year.
Got it. That paints a better picture. And cash flow, that's always key.
Cash flow from operating activities was, well, it surged, up 68% to 1.22 billion BRL. A really strong point.
Wow. Okay. So resilient top line, decent margins despite the net income comparison noise, and strong cash flow. What's driving this? What's the strategy?
Management laid out three key objectives, sort of the strategic pillars. First, avoid disruptions. Second, keep the momentum going. And third, build a stronger company overall.
All right, let's dig into those pillars. Pillar one was about leading and growing the category.
That's right. And they saw volume growth in about half of their main markets. That's nearly 80% of their consolidated volumes, mind you. Carnival certainly helped there.
Okay. And how did the core beer segment do?
Core beer performed pretty much in line with, or even a bit better than, the industry in most of their key markets. So holding its own.
What about the pricier stuff, the above core brands?
Those did really well. High single-digit volume growth there. And non-alcoholic beer volumes, they were up massively in the mid-30s% range.
Mid-30s for non-alcoholic. That's huge.
It really is. Even their mega brands, the big volume drivers, grew volumes by mid-single digits and actually gained brand equity, brand health, in 8 of their top 10 markets.
Okay, so pillar one looks pretty solid. What about pillar two, digitize and monetize the ecosystem?
Yeah, they're making progress there too. B2B transactions are expanding. They saw monthly active buyers up by high single digits.
So more businesses buying through their platform.
Exactly. And the 6EU per ratio, basically how many different products each buyer orders, improved slightly as well.
And the marketplace.
Marketplace GMV, gross merchandise value, grew by 60%. 60. And they're seeing more non-beer products being bought, up low teens.
That 60% is a big number. And the direct-to-consumer side, Zed Delivery.
Zed Delivery is still a major factor. Fulfilled nearly 17 million orders, which is up about 5%.
Okay.
And interestingly, the mix on Zed Delivery is leaning more towards returnable glass bottles and also the premium segment compared to their overall business.
So it's not just volume, it's a potentially higher value mix through Z.
Seems that way. And they also mentioned using it to help develop new products like something called Beats Red Mix. So it's an innovation engine too, apparently.
Okay, pillars 1 and 2 showing progress. What about pillar 3, optimizing the business?
Well, that connects back to the profit numbers we saw earlier. This focus on optimization led to their 10th consecutive quarter of consolidated EBITDA growth and margin expansion.
10 quarters in a row, that's consistency.
It really is. And that improved profitability is feeding right into that strong operating cash flow we talked about.
Let's dive a bit more into the financials then. Capital allocation, what are the priorities?
It's pretty clear. Return cash to shareholders and maintain financial flexibility. That's the mantra.
And they're acting on that.
Yep. They announced an intermediary dividend of 2 billion BRL. That brings the total announced dividends for 2025 up to 4 billion BRL already.
So definitely prioritizing returns. Were there any financial headwinds mentioned? Anything dragging things down?
There were. Net financial results actually worsened by about 450 million BRL compared to last year.
Ouch. What drove that?
A few things. The Brazilian real appreciating was one factor. Also, costs involved in upstreaming cash basically getting money out of Argentina and Bolivia, and higher costs for their FX hedging in Brazil.
Right, the complexities of operating across multiple markets. And the tax rate.
The effective tax rate jumped to 21.7% from 15% last year. But again, that's mostly due to that one-off tax benefit they had in Q1 24 not repeating.
Got it. So higher tax rate, but expected. How about investing activities, CapEx?
Cash flow from investing activities actually looked better, improved by 56%. But that was mainly due to how short-term investments played out last year. CapEx itself was down about 18%.
CapEx down, okay. And financing activities.
That showed an outflow, minus 8.8 billion BRL, mostly dividends paid out, and also their share repurchase program. They mentioned that's about 65% complete now.
Okay, thanks for that financial detail. It's always good to look at the different regions, too. How did Brazil perform specifically?
Brazil was strong. Record Q1 volumes in both beer and non-alcoholic beverages, NAB.
Record volumes in both. Wow.
Yeah. Beer volumes specifically grew 0.7%, which they called resilient. And the Carnival activation, they said, drove the highest volume in their history for that period.
Highest ever Carnival volume. And the brand mix in Brazil.
The above core portfolio, Corona, Stella, Spatton, Original, Budweiser, that's now roughly 30% of their volumes there.
30% from above core. That's significant.
It is. And growth there is strong. Premium and super premium were up in the 20% range. Core plus Budweiser up high teens. Even the core brands like Brahma and Antarctica saw mid-single-digit volume growth.
And NAB in Brazil
Exploded, up approximately 40%. Gross margin in Brazil also improved nicely by 360 basis points. NAB overall saw double-digit top-line growth, really driven by things like non-sugar CSDs and sports drinks.
So Brazil sounds like a real bright spot. What about elsewhere? Latin America, South, Argentina?
Argentina showed a sequential volume improvement led by beer. This is despite the consumer environment still being pretty tough, still recovering.
This is signs of life despite the macro picture, market share.
They said market share was flat, but their mega brands did improve brand health scores.
Okay. How about Caribbean and Central America?
That was weaker. Volumes declined mid-single digits, mostly in the Dominican Republic. They pointed to a softer macro environment and wider price gaps, increased price competition.
Got it. And Canada?
Canada had some headwinds, bad weather. The timing of Easter hit the whole industry. But AMBA actually thinks they gained a bit of beer market share. Their mega brands rose slightly there.
Interesting. So a bit of a mixed bag regionally, but Brazil looking very strong. What did management say about the outlook? What should we expect going forward?
Well, they flagged some headwinds. Specifically, they expect significant FX and commodities pressure to hit their Brazil beer cash COGS per hectoliter. Basically, their cost of goods starting now in Q2.
So cost pressures incoming. Despite that, are they still aiming for margin growth?
Yes, they reaffirmed their ambition to expand consolidated margins for the full year. It won't be easy, but that's the goal.
How do they plan to achieve that with rising costs?
They're relying on, well, consistent implementation of their strategy across the board. They express confidence in their revenue management, especially in Brazil.
Meaning pricing power.
Essentially, yes. They feel the strength of their brand portfolio, both core and above core, gives them options, flexibility on pricing. And they also highlighted their digital platform, the B2B side, helping them manage promotions and discounts more effectively.
So using tech to help offset costs, too. And capital deployment.
Just reiterated their commitment to being disciplined there.
Okay. Let's shift to the Q&A part of the call. What were analysts pressing them on? Brazil beer pricing must have come up.
Oh, absolutely. Management explained that Q1 pricing was affected by a couple of things, like a mismatch in the timing of price increases compared to last year, and less carryover benefit from previous hikes.
Some specific timing issues in Q1.
Right. But they stressed that net revenue per hectoliter growth is still absolutely key for margin expansion. They feel the stronger portfolio mix gives them more levers to pull on revenue management. And again, digital tools helping optimize promotions.
Makes sense. What about that consolidated margin expansion goal, especially with the cost headwinds they just mentioned?
Yeah, analysts definitely pushed on that. Management acknowledged 2025 will be different than the last couple of years where they had cost tailwinds. Now it's headwinds, especially in Brazil.
So how do they bridge that gap?
They said achieving margin expansion this year will need contributions from all three strategic pillars: lead and grow, digitize and monetize, and optimize across all markets. They specifically mentioned focusing on productivity and leveraging their internal talent.
Okay, so relying on the whole strategy and not just one part. Did beer affordability in Brazil come up? It's a big market with diverse consumers.
It did. Management sees opportunities for growth there by increasing participation, getting more people drinking beer, and also consumption frequency. They believe their portfolio strategy, having brands at different price points, lets them address affordability, even at the bottom of the pyramid, while still pushing premiumization.
Interesting balancing act. Was there talk about specific brand performance?
Yes, the Skull brand was brought up.
Yeah.
The core segment overall declined slightly, and Skull was apparently the main reason for that dip.
So Skull is dragging a bit.
Seems like it recently. But management was quick to say Skull is still really important strategically, has high relevance. They insisted they're taking action to get it back on a growth path after it declined in 2024.
Okay, something to watch there. Any guidance on CapEx for the full year?
No specific number given for 2025, just the usual commitment to disciplined capital deployment, maximizing asset use, and really scrutinizing business cases for investment.
Standard procedure then. And lastly, cash distribution. Any more hints on future dividends or buybacks?
They said they're constantly reviewing their cash position and the potential for more increases in those intermediate dividends. They look at dividends, IOC, interest on capital, and share buybacks as the tools to return cash. It sounds like an ongoing assessment based on performance and outlook.
Got it. Okay, that covers the Q&A highlights. Now let's pivot to our This Is Not Financial Advice segment. Time for some outrageous but plausible trade ideas based on this call.
All right, let's brainstorm. Idea 1. Given Ambe's really impressive growth in the non-alcoholic space, going on zero, Pepsi Black doing well, and their use of digital channels like Zed Delivery,
Yeah.
what about a long position, not in AMBA, but maybe in a Latin American e-commerce platform, specifically one that could potentially strike an exclusive partnership with AMBA for direct-to-consumer sales of just their NAB portfolio?
Exclusive e-commerce for Ambe's NAB. That's the outrageous part, the exclusivity. What makes it plausible?
Well, AMBA already has the DTC infrastructure with Zed Delivery, showing they're comfortable there. And partnering could rapidly scale their NA reach online, leveraging their brand strength in a growing market segment via a dedicated e-commerce player. It's a strategic fit, potentially.
Okay, leveraging Ambe's NAB strength through a focused e-commerce play. Interesting angle. What's your second idea?
Second idea plays on the cost pressures. We know FX and commodity headwinds are expected in Brazil from Q2, but Ambe is confident about maintaining margins through revenue management and productivity.
Right, the confidence despite the headwinds.
So consider a pairs trade. Go long Ambe and short a major global commodity producer, one that's heavily reliant on materials priced in US dollars, but has significant exposure to the Brazilian real.
Okay, long Ambe, short a commodity producer exposed to the same pressures. The outrageous part is betting on the beverage company to handle inflation better than the raw material supplier itself.
Exactly. The plausibility comes from Ambe's track record. Their pricing power through strong brands, maybe superior hedging strategies compared to a pure commodity player. It's a bet on Ambe's execution against those specific headwinds.
That's definitely playing the nuances of the call. Two creative, if speculative, ideas there.
Absolutely speculative, just food for thought.
And that wraps up our deep dive into Ambe's first quarter 2025 earnings call. We've hit the key results, the strategic pillars, management's view.
And remember, folks, those trade ideas, strictly for informational purposes, definitely not financial advice. Please do your own homework.
We'd love to hear what you thought about Ambe's quarter. Did anything particular stand out to you? Find us online and share your take.
As you mull over these insights, think about Ambe navigating this dynamic environment, balancing that established beer business with the fast-growing Ambe segment.
Yeah, it really makes you wonder. In a world getting more health conscious, how sustainable is that incredible Ambe growth?
Yeah.
Can it keep offsetting potential beer headwinds long term? Just something to keep in the back of your mind as you do your own research.
Definitely something to watch.
Tune in next time for another deep dive into the world of earnings.